Have you heard the new rule that's going to require people who have higher credit scores to pay higher rates to buy a home? And it's lowering rates for people with lower credit scores. We're going to break that down for you in today's video. But first, I want to mention that I believe something great is going to happen for you today. Back to the video. If you're someone who believes that doing the right thing and paying your bills on time and being responsible with money should be rewarded with lower interest rates, give this video a thumbs up and pass it around so other people will be aware of this. What are we talking about? Well, we're talking about the Biden administration's new rule that is being promulgated through Fannie Mae, and it's changing what's called LLPAs. We're going to talk about what that is here and break it down a little bit more. What is, however, Fannie Mae? Well, Fannie Mae is known as a government-sponsored enterprise, and it purchases mortgage loans from banks and credit unions and takes them off the books of the banks and credit unions and then markets them to investors to increase liquidity in the markets. In other words, raises funds so that they can purchase more mortgages from banks and credit unions and keep the process rolling. If you're not aware of how that works, basically, when a bank or a credit union originates a loan or a mortgage, oftentimes that bank or credit union wants to get their money out of it right away and not have to wait 30 years to get their money back. So they will turn around and sell that mortgage to Fannie Mae, and Fannie Mae will buy it if it meets certain criteria, and that way the bank gets their money up front and they can then turn around and relend that money out to another home buyer. And Fannie Mae, then to raise funds, will turn around, package up a bunch of the mortgages together and sell them to investors on the open market. And that's how Fannie Mae generates the income to purchase more mortgages from more banks. I can do a more detailed video at another time, but that is, in a nutshell, the process. Now for more of what we're talking about today. This involves something called loan level price adjustments. And these have been around for a while, particularly since the 2008 housing crisis, banking crisis. And it's an additional fee that is charged on the loan. And these fees may be paid up front as part of closing costs, or some lenders may incorporate them into the interest rate that they are receiving on the loan from the home buyer. You can see here I've got the Fannie Mae announcement about the loan level price adjusting matrix. This is where they've more or less hidden these additional fees into a matrix based upon various factors. But this goes into effect May 1st of this year. So any loans that are originated on May 1st or after, these new fees are going to go into effect, and it will likely affect you if you are purchasing or refinancing a mortgage anytime after May 1st. In fact, some lenders may be incorporating the fees already. You may want to ask about that. But Fannie Mae purchases a bunch of loans and lots of mortgages, so this is going to have an impact on pretty much anybody out there buying a home. So let's take a look at what they're saying here. You can see there's quite a bit of detail, and over here are the loan to value range. We've got the credit scores on the left hand side, and we've got the LTV, which stands for loan to value range. That's the range, in other words, how much of the value of the property is being loaned. And of course, the higher the percentage of the value of the property, the higher the interest rate, because the higher the risk is that if a borrower defaults, well, there's less wiggle room there. If a bank has to foreclose and then sell the property at a discount, there is not as much room to cover the money for the bank. So oftentimes it will be riskier and the rates will be higher. But this is a breakdown. It shows the loan to value ratios expressed as a percentage. So down here, anything less than 30% on the left-hand side, and goes all the way up to anything over 95% on the right-hand side. And the credit scores are listed on this left-hand side, and it's everything equal to or below 639, and this is showing the rates. These rates here are going to be the amount of the additional fee that's being charged to the borrower. As the credit scores go up, all the way up to credit scores equal to or above 780, you can see all of the scores listed here. Now, as you can see, the lower credit scores are still paying a higher percentage. Percentages here are the loan level price adjustments. These are the adjustments that must be paid either as part of closing costs. For example, if you are, let's say you're borrowing 80% of the price of the home and you have a credit score in the 720 to 739 range, your loan level price adjustment is going to be 1.250% of the amount of the mortgage. So you're going to pay an additional 1.250%. Now, these percentages do go up as you have a lower credit score, but these are an increase over what the loan level price adjustments used to be prior to May 1st. And these down here for the lower credit scores are actually a reduction in what they are. And some people would say that the borrowers with higher credit scores are now paying a higher amount, which then subsidizes people with a lower credit score. This is nicely set forth in this article here. This is by Matthew Graham, and it's got a nice chart that shows how it changed. Okay, so this is referring to loan level price adjustments imposed by Fannie Mae and Freddie Mac. So both Fannie Mae and Freddie Mac are increasing these fees. And it's the two entities that guarantee the vast majority of home mortgages. And the LLPAs are based on loan features such as your credit score, your loan to value ratio, occupancy. In other words, are you going to live in the home or is it going to be occupied by a renter? And most recently, it's also debt to income ratio is going to impact on it. And this applies to any mortgage or any loan guaranteed by one of the agencies, regardless of who the lender is. So it doesn't matter who the bank is. If they are going to sell this to Freddie Mac or Fannie Mae, they must comply with this requirement. Now, it will not apply to FHA loans or VA loans or certain other jumbo or non-conforming loans, but those are not the majority of loans. This takes effect on May 1st of 2023, and many lenders are already starting to charge these additional fees. All right, but this is what I wanted to get to and to show you is this chart here, which is essentially the same chart that we looked at from Fannie Mae, but this has got some additional features to it. And this is showing you anything in the red or the orange is paying higher LLPAs than it did before. And then any of the green or yellow are paying lower loan level price adjustments than they did before May 1st. And if we look, there's a big, huge target right here in the middle, and that's folks with credit scores between 720 and 759. It looks like those are some of the highest increases in the loan level price adjustments. So that is kind of where folks are being targeted. There's also some additional fees paid here in the 260 to 779 range, but there's a lot of green and yellow down here at the credit scores that are below 660, and they are going to be paying a lower loan level price adjustment. So the bottom line is there's going to be an increase in the fees that you're paying if your credit score is higher, and you're going to have a decrease in the amount of fees you're paying if your credit score is lower. You still pay a lower fee if you have a higher credit score. It's just your fees are still going up. That's all I have for you today. If you're getting value out of this, please subscribe to my channel and click that notification bell so you never miss a video. Thank you.